Finclusion to Fintech. Finclusion to Fintech is designed to help fintech innovators understand the unique money management strategies that low-income people in the developing world use. The tool helps innovators design suitable financial products that the underserved would want to use on a regular basis. Around the world, people with low incomes experience more volatility when it comes to their incomes and expenses. They, therefore, have more variable financial needs that require complex financial management techniques. These techniques are difficult to standardize and generally have only managed to scale in an informal manner. The money management techniques that high and low income people use are vastly different. Financial needs can be broadly classified into 4 categories: manage short-term liquidity, accumulate a large lump sum of money, for instance to invest or pay a large expense, deal with sudden expenses or shocks in income, and to make and receive payments. We can sum up the major differences in financial needs on the basis of income levels. While people of all income levels share these needs, the financial solutions designed to fulfill them vary enormously. Low-income people are forced to prioritize financial stability by building liquidity and mitigating risk, often at the expense of building lump sums of money. As a result, they often have to juggle between financial solutions. Low-income people have a reduced ability to make long-term plans and investments and tend to avoid solutions with rigid structures or hypothetical outcomes, such as insurance. Instead, they prefer flexible solutions that let them negotiate terms based on their circumstances. Formal money management options are not obviously superior to informal ones. The first informal option is social network finance. This is a form of financial management that takes into account the powerful effects of social relationships to help achieve financial goals. Currently, few formal financial products maximize on social relationships. Fintech firms that design products should therefore explore mechanisms that allow people to do more than simply send and receive money. Low-income people use working money as a method of money management. This implies people not letting their money sit idle without giving returns. This is why common purchases of low-income people include non-financial assets such as domestic animals like chickens and fertilizers, which can offer higher returns than formal products. Liquidity farming is the third method of informal money management in the digital age, which people use to manage risk. Liquidity farming involves cultivating inflows to best match expenses and building trust in the community so that multiple sources of money are available when needed. Formal financial providers need to understand that policy constraints limit the ability of people to farm liquidity. Therefore, many people still prefer small lines of credit for unforeseen risks. Some people also use the practice of building on existing financial strategies. For instance, while making payments, people choose between paying by mobile money or by cash. Mobile money providers must build on existing informal strategies, solve problems quickly, and provide clear value. They should target specific retail demographics and explore retail payments for online goods and services. Recommendations: Fintech players can build solutions based on time-tested, popular informal money management techniques instead of trying to force financial products that are essentially designed for people with more stable financial needs. They can also design flexible, scalable products that assist in complex decision-making while incorporating other facets of customers' lives into their financial management. Rather than providers pushing products onto low-income individuals, they should develop demand-based pull solutions instead. Using the right strategies to design the next generation of financial services for low-income markets is expected to offer tangible improvements on the informal financial management techniques that remain ever so popular in these parts of the world.